You clicked on this video because you want to know the reality of trading in the stock market. You want to become profitable. You want to make money in the stock market. You want to actually start getting away from all those losses. Maybe you're already a trader. Maybe you're thinking of becoming a trader. And maybe you just want to know what the realities are of trading in the stock market. I've been doing this for 30 years. That's a really, really long time. Still love it. Still enjoy it. So come with me today and I'll try and show you what the realities are in the stock market and what you can expect if you haven't traded before. We're going to go to the charts. We're going to have a look at the system that we use and the strategies that we use to make sure that you become a profitable trader. We're going to check out where the best way is to go. But there are a few realities and a few really strong, important things that you need to know before we get to the charts. After we've been to the charts, we're going to look at what causes the fear in the stock markets and why the stock market is a 50-50 game. And we're also going to go and organize your free gifts for you at the end of the video. So don't forget, watch to the end. While we're here, guys, don't also forget that trading is a risky game. Trading is risky. 80% of traders do lose money. And if you don't like risk and you don't like losing money, you probably shouldn't be trading. Don't trade, stay away. That said, guys, do you know what? That traders who trade on the lower time frames, like for example, 5 minutes, 1 minute, 1 second, those guys, 99% of traders lose money. There are a few guys out there that are really good at this, high risk traders, guys who really know what they're doing, who can trade on the 5 minutes and make a really serious amount of money. But what you got to be careful of with the 5 minute trading, what you have to understand with the 5 minute trading is a candle is only valid for the next candle. It's not valid for the whole day. And if you're trading on the 5 minutes, don't get caught up in the whole hype of staying in the trade and that sort of thing. I prefer to trade on a much slower method, more on a swing-like method, where I can relax, I can go out, I can leave the trades and that sort of thing. And I have more relaxation, more patience, because that's how I learned to trade in the old days. In the old days, we didn't have all these computers and fancy stuff and whatnot. We had to trade based on what we thought it might happen tomorrow, effectively. There was no quick 5 minute trading for me. If that's what you like doing, that's great. But just remember, it is very difficult to do. And the problem is you'll win a few and you'll have a few great successes if you manage your risk correctly and your mentality is right. But if you take one big giant loss, it could wipe your account out. And that's why people struggle to pass these prop firm challenges or funded challenges and that sort of thing. If you want a funded challenge, if you don't have the money to trade, I do have a link in the description for a funded challenge, which we're doing live together every week. We're doing this challenge to see if it's possible for an old toppy like me to actually pass a funded trader challenge. And that's why we've got involved in that. But the reality of the stock market, and that's what we're supposed to be talking today. And obviously I'm getting sidetracked again and moving off in another direction again, as I always do. But the reality of trading the stock market, guys, is not what you think. So a lot of you think that you should be able to have a system in the stock market, a system that works for you, that helps you to win in the stock market, that gives you a 80% chance of winning every single trade. You think you can actually get a system, because all these guys promote it to you, obviously, and sometimes they even sell it to you. And there's a system that works for you, right? And you do this whole course or you buy this whole system and they tell you it's going to win every trade. It's going to win every trade. And the thing is, I want to give you the reality here. And the reality is very simple. There is buyers and there is sellers in the stock market. The reality is it's made up of buyers and sellers. So if there's 20 people in the market, 10 of them are buyers and 10 of them are sellers. And every single one of them believes that they've got an edge in the stock market, that their system is going to win every single time. Now, the problem behind that is obvious. That is, if I believe that my system has the edge over your system, one of us has got to be wrong. In other words, you could basically have no system at all and just take a trade and the market's going to do one of two things. It's going to go up or it's going to go down. And that's it. There's only two ways that it can go, except maybe for sideways. But anyway, you know what I'm saying. Effectively, if you make a buy, it's either going to go up or it's going to go down. There's no two ways about it. And your choice is very much, it has a 50% chance of winning. Whether you have an 80% strategy or a 20% strategy, it really doesn't matter. You have a 50% chance of winning that trade based on the fact that no matter what your system is or how great your system is, there is no guarantee that you're going to make that win. It's the same as going to a casino, but this time you've got an edge. This time the casino's normally got the edge when you go to the casino. This time you've got the edge. But either way, there's no guarantee of a win. Nobody can hand you a little piece of paper that says, hey, Johnny, you're going to win this trade for sure, because that's not going to happen. And that's why I try to explain to you that it's not about the system. It's not about the graphs. It's not about the charts. What's behind the charts? At the end of the day, human beings who've put orders into the stock market. And there's a whole bunch of other human beings standing there waiting to take your money, or you're waiting to take their money. I don't know which way, but either way, at the end of the day, everybody thinks they're going to win. Makes it a 50-50 game, guys. So the only way, the reality is, the only way you can win in the stock market is if you understand that you have to manage your risk. In other words, be slow to take your profits and fast to take your losses. Don't follow your losses down. Take a small loss and make a big win. It's not rocket science. It's simple. Keep it simple. Don't get involved in all these complicated, super fandangled, marvelous systems that they promote to you. That they say to you, if you do this and the moon turns bright and the stars align on the right, and then you take a trade and you're guaranteed to win. You're not. Somebody said to me the other day that I should be showing you a system that gives you a 70% chance of winning. You know what, guys? I am showing you a system that gives you a 70% chance of winning. I'm actually showing you a system like that. I'm showing you price action. I'm showing you support and resistance. I'm literally showing you a system that should be giving you a 70% win rate. But how do you manage that win rate? I can win 8 trades out of 10 with tiny little wins and 1 big loss. Anyone can do that. It's not about the win rate. And I don't know how I'm going to get this over to you, but the win rate is absolutely meaningless. It means nothing if you're not profitable. How do you become profitable? You become profitable by making more on your wins and losing less on your losses. If you sell a product, you're not going to sell it for a loss. You're not going to put all your effort into a losing price. You're going to want to win. And that's what it's all about at the end of the day. Backing your winners, chasing the winners, not chasing the losers. Really difficult to get this over. But I tell you what, guys, let's go and have a look at the charts. Once we've had a look at the charts, once we've seen the charts and we know a little bit about what we're talking about, and if you want to know a little bit more detail, go to the previous videos and have a look at that. But once we've done that, then perhaps you can get into, we can talk about the fear and the 50-50 after the charts. And just to give you a little bit more insight into the reality of trading in the stock market. Here's the chart, guys. So we've been talking about the reality of trading in the stock market. And at the end of the day, I've got to say to you guys that it's not about the chart. It's about your mentality when trading in the market. It's about how you approach your system at the end of the day that makes you the money. You don't make money out of a system. There's so many of you guys calling that at the end of the day, I'm going to put this on the US 500 here. Many of you calling, oops, finger trouble there, guys, finger trouble. A lot of you guys saying that 50-50 is not true and that you've got to teach people how to have a 70-30 and blah, 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 blah. I've heard it all before. I've been doing this for a long time and there's no such thing. So many of you believe that a system like this or a moving average crossover or a stochastic or an MACD will somehow make you the money. But it's your mentality at the end of the day that makes you the money. If I look at this trade here, I myself looked at this trade. Here's a bearish trend, right? I took this trade. Here's a bearish trend. A lot of you will know this, by the way, from the live videos. But there's the short, right? So we take the short. And do you know what? It goes short. And it goes down, all the way down to the... I open up at that point, and I've told the story before now. I open up at that point and I see that my stop loss is now 120 points away because it's all the way up here. And we're all the way down here. And the trade's doing pretty well. So what do? I'm slow to take my profit. I don't take profits. I'm quick to take my losses. That's the mentality in this game. So what I do is I move my stop loss up to cost. In my case, cost was 7 points in the positive, which made me a profit. That's fine. No big deal. But then my stop loss is now 60 points away in the S&P That's a pretty good move. What I'm saying to you guys, it's all about the mentality of how you think. Most of you would have seen this profit and you would have taken the profit. Your fear would have said to you, I'm in so much profit here. I'm so much profit, 68 points in profit. That's a huge profit on the S&P, depending on what risk you're taking. So most of you would have jumped in, clicked the button and taken the profit. And you know what? You would have been really happy with yourself because you would have taken that profit and you would have said, I'm so clever because I took that profit, because look at it now. It's gone all the way back up and it would have taken out my stop loss and I would have lost a fortune. Most of you would have done that, but not me, because what I saw, the picture I saw was this is all the way down here, but it could go all the way down to here. And look at the money I would make if it went all the way down to here. So my thought is, I haven't lost anything yet. This is how you approach trading, guys. I haven't lost anything yet. I've just got a profit on the board. So what I'm doing is I'm moving my stop loss into a place where I'm not going to lose anything ever. It's just going to be either a break even or a profit for me. And then I wait to see what happens. And you know what? It goes the other way because of volatility, because some Fed guy's talking, because someone said something, because all the money guys are talking a whole lot of rubbish about rates and what have you, and everyone's getting excited for absolutely no reason. Look, we all know that this particular trade, I'm still looking at short here. I'm still thinking this will probably go hit the resistance again and come all the way down, because I don't think this is finished. But all I'm trying to point out to you guys at the end of the day is the reality of trading in the stock market is it's not about a system. A lot of you guys think you're trading against candles. You're not trading against candles. You're not trading against lines. Sorry, now I'm drawing the wrong thing. You're not trading against lines here. You're not trading against this support and resistance. Do you know what this is? Do you know what this resistance is? This is where real people, real human beings, real live human beings, and one or two bots, but real live human beings have put their orders. They've all got sell orders in that area. Big money. And most of the money doesn't come from you, the retail trader. Most of the money comes from the pros, the pro companies, the pro trading company, the pro hedge funds and all these guys, okay? That's where most of the money comes from, not from you. So those guys are looking at the market in a completely different way to what you're looking at the market. They're not looking at a little chart and going, oh, let's put money in here. They've got a completely different way. You know, when you look at this chart and you see a little candle and you think, ooh, there's a candle there, that there's a line there that's like a barrier. No, it's not. What it is a whole bunch of orders lying there from the guys who know what they're doing. And then you are basically trading off them. If you get it wrong, it's going to go the other way. You can literally take all these lines away off the chart and the chart will either go up or it'll go down when you take the trade. There is no basis for you to tell me that you have a system that's better than everyone else's. This is the controversy and the reality of trading the stock market is so many people get people into trading, get young people into trading particularly, and tell them that they got a system that's going to win them 7 or 8 trades out of 10, or it's never going to lose, or whatever the case. And it's just not the truth, guys. It's just, man, how can I get this over to you that they're lying? It's not how it works. It just, you know, what do you think the pros are doing when they're sitting there watching you trade? Well, they're not watching you. They're watching the markets and they're waiting to take your money. And if they see a pattern, that retail traders are following, they're going to use that pattern to their advantage and they're going to turn it upside down. So don't you think that you can be clever enough to have a system that can beat the market? That's why these systems change on a regular basis. And this is why I always tell you guys to keep it simple. Just trade with price action. Just trade with support and resistance, supply and demand. The basis of what you're doing, the reality is you're looking for the orders. You're looking for the orders in the market and you're looking to follow that money and go with it. What happened here is a whole bunch of news items, I suppose, people talking in the market, and that causes volatility up and down because everyone gets involved in that. So the news, you know, I used to hang my hat on the news. I used to hang my hat on speeches and things like that. And then I learned that it's a whole lot of rubbish and it's only going to settle down anyway. So don't worry about it. For those of you that haven't watched my videos before, you might know that I normally go and get my lines from the day chart. I normally go and pick my levels on the day charts. Once I use the line chart for closing prices to pick my levels. Then I take it back to the 4-hour chart or less, whichever time frame you want to trade on. And then then I put it on a candles. The candles just show me which way the market's going, or if there's a confirmation trade coming out of resistance or coming out of support. But I'm not teaching that today. Today I'm talking about the reality of trading. So if you want to learn how to do that, just go to any one of my previous videos and I will most probably have mentioned it there, and it'll most probably be there for you to actually follow the system quite closely. It's quite easy to follow and quite simple. I don't make it complicated like all the other systems where you've got to wait for something to happen here, for something to happen there, and for something to happen there, and for the moon to turn bright and all the rest of it. No, we don't do that. We simply wait for it to hit a resistance and we try and trade with the trend. So there's three ways to do it, guys. The main way is you follow the trend and you trade with that trend. So in this case, the trend is down, but the structure is broken. So we can't really use that as an example. Once the structure is broken, that means the structure is broken, guys. It's going the other way. But if you've got a trend like this, you can follow the trend and go with that trend and follow it up. The other way is obviously when you see the trend is really overbought. For example, it's the end of a trend and it's teetering around and it's hitting resistance a lot. There's a good chance that you might get an opposing trade. So we look for that type of trade where we get a trade out of the overbought situation. A lot of people use RSI, stochastics, that sort of thing to show them that. You don't need that, guys. If you've got a huge long run and it's hitting resistance, and it's just pretty obvious. It's not complicated or rocket science, that. And then of course there's those trades that are in a range where it's staying in a range for a long time and you can trade between those ranges while it's in that range. But be careful, when it breaks out of that range, it's normally a strong breakout. What I'm expecting on this particular one is it'll probably hit resistance and then come on down. What I'm talking about with trend is, if you look at Brent, you can see there's your trend, long downward trend. Try to trade within the structure, try to keep it trading in the trend. I wouldn't really want to take a long trade immediately here, but it also gives you this is extremely oversold situation. So there's a very good possibility that if it breaks structure here, so what you got to do is just wait for it to break that structure. If it breaks that structure, you might be looking at a good long trade here because it's been short but too long. So that's what you're looking for. And then if you go to gold, you see what I'm talking about with the range. There's your resistance, there's your support. It's trading in that range. But when it's been trading in a range for a long time, what you're going to watch out for, guys, is at some stage or another, it will break out of that range. So be very careful of, oh, it's trading in a range, I'll just keep on trading this forever. It doesn't stay there forever. It will break out to one or other side sometime soon. The fact that this has been a long trade tells me it'll probably break out to the long side. So now that you've seen the charts and you know what I'm talking about when it comes to charting, look, you're going to have to go to my previous videos to get more detail. I will come out with more detail in the future videos as well. Don't forget to watch my live shows as well, because they're quite interesting. We're doing the Funded Trader Challenge together, Tuesdays and Thursdays. Tuesdays, you're in a session. Thursdays, we do USA. But back to this. The whole point of winning in the stock market is all in the psychology. It's all in the mind. Why do I say it's all in the mind? And what makes me tell you to be careful of your mind when it comes to trading? Well, it's all about fear. When we start to lose money, there's an inbuilt thing in our head that we can't avoid, called fear, especially when it comes to money or finance. When we start losing large sums of money, we start to panic, and that panic invokes adrenaline and it invokes us to make mistakes. It gets us to make quick decisions, wrong decisions, rash decisions in the marketplace. And one of those decisions is, I'm losing. If I hedge and double up, then I'll be able to make that money back because I'll have reduced the cost and it should get back to that level, because some other odd reason in your mind, you believe that the price is going to retract and it's going to give you that money back somehow. But it doesn't, and it keeps on going down. So you add some more and you think, I'll double up some more and I'm sure I'm going to get this money back, and it doesn't. It just gets worse. And there is a point in the market where you can't take it anymore, and there's a point where your brain says, that's enough. I can't keep losing this much money. I'm thousands of dollars in. I'm blowing the account. I got to get out of this now. And then you get out, and guess what the market does to you? It goes the way you wanted it to in the first place, because that's the market. That's what it does. It's just, we call it Murphy's Law. That's how it is. So what we do in the markets to get around that is we, instead of following our losses down, we have a set stop loss. And that stop loss is on every single trade the same amount. If we decide it's $200 per trade, then it's $200 per trade. That's it. End of story. That's what you trade. And if you lose it and you walk away. The winners, on the other hand, we try and make them double that, at least $400 and more. And when it goes into profit, we're not quick to take our profits. What we do, like with our losses, we usually wait. We wait for the winner. In other words, move the stop loss up, move it to break even, follow it up, maybe move the price up a bit more, the stop loss up a bit more, so you're in profit, and then maybe add to the trade, double up on the trade, make it bigger, and so on and so on and so on, and make a decent profit on a winning trade. And you'll find, oddly enough, that probably more than 50% of your trades are actually not profitable. More than 50% of them struggle to make a profit. It's a funny thing that, but that's how it is. Now, fear comes into play when you're in profit. When you're in profit and you see a profit, your brain says to you, take that profit, get out, because you don't want to lose it. But you haven't made any profit yet, dude. You haven't made any profit yet. Leave it there. It's just on paper. Move your stop loss up to a break even. You haven't lost anything yet, and just make sure you don't lose anything. That's all you got to do. So you take that $200 risk away. You've just gained $200 because you paid $200 for the trade, and now you've moved your stop loss up to break even. You know what? You just won $200 because you're back on a zero. Now you wait for it to go up. Be slow to take those profits. Take your time, because when those profits run, that's where the money is. Those are the trades you're looking for. You're looking for those few trades that run in your favor and run well. There are points where you have to take profits. I agree. Everybody knows this. But if you keep taking your profits when you've got a $200 stop loss, and every time your profit reaches $50, $70, you take a profit, you're not going to win, because you're going to take 7 trades like that and think, I'm a 7 out of 10 trader. My system is infallible. And then you're going to take that one loss, which is $500. And then you're going to think, where's all the profit? This is not good, because there's no profit at the end of the day. Watch out for that. If you're going to have a $200 stop loss, make sure you're winning more than $200 on every trade, because otherwise you're just going to lose. You're just going to lose at the end of the day. Because do you know what? The reality of the stock market really is, every single one of us, no matter how long we've been trading, no matter how clever our system and how brilliant we think we are, we all lose. We all lose trades. Don't think you're not going to lose a trade, because the stock market doesn't know who you are, and all those people behind those prices don't know who you are. All they care about is getting their order in, making a profit the same way you do. Trouble is, not everyone can make a profit. And in fact, 80% of traders do lose. So I said free gift. Pop down to the description and get your free Forex book, which is there for you. Don't ask you anything for it. Just grab it. It's in a PDF format. Download it for yourself and enjoy it. It's just a little book about trends and that sort of thing. And then on top of which, I give the trade of the day every single day on the secret blog. It's the little blog that I've got. And on the blog, it's just a trading idea. It's not trading advice. Just remember that. It's not trading advice, just an idea. And if you want more detail, if you want a video every day and you want the list of all the trades and that sort of thing, then it's best you join as a member with YouTube, because it's a little bit of extra work that I put in, and I think it's a great idea to have this membership thing. We're building a community together, and as a community we can grow as traders, and you guys get a lot more access to me as members, because we can chat and talk about these things and what have you. And believe me, I do figure out who's who. Okay, so guys, with that, I want to thank you for watching. Don't forget to come back and watch Saturday's video, which is the run through for the week and what we did last week and what's going to happen next week. A little bit of information, and then of course we move on to Monday's training video again, and we'll go live again next week. Thanks for watching, guys. Till next time, cheers, thanks, and bye.